Welcome to Remarkable Retail Podcast, the only podcast produced by two of the NRF's top retail voices. I'm Michael LeBlanc.
And I'm Steve Dennis.
Our guests on this episode back on the podcast live from the Narvar podcast studio at the NRF Big Show are two fellow NRF top retail voices and two of the most respected voices in the retail industry. Billy Mays, CEO, Brooklinen, former chief customer officer for Urban Outfitters, J. Crew, and a bunch of other stuff. A rich, diverse set of experiences. And David J Katz, EVP, CMO, author, speaker, alchemist, as his LinkedIn profile describes him.
We love a good alchemist.
And he is with Randa Apparel and Accessories, and another bright light. Love talking to these two gentlemen. Of course, after the news and after the interview, we'll be back with what we find remarkable this week and what we are keeping our eyes on around the corner. Now, Steve, we don't do a lot of episodes where we gather fellow retail industry types, but based on how much fun and insights per minute this interview produced, maybe we should revisit this strategy.
Well, I feel like to a certain degree, having those guys together, it's almost giving our audience like an eavesdropping experience of it. The four of us at dinner just kind of riffing about retail. It's a little bit more structured than that, but I think that is part of the fun. So yeah, one of my favorite conversations we've had.
All right, well, let's get right to the news. Big week in the news. Now, it's not uncommon for us to talk about Amazon in our news segment, but This week was a particularly interesting week in the world of Amazon. Talk about it.
Yeah, pretty action-packed. I guess the big news, which I'm sure most people have seen, is that they are rewiring their grocery strategy, in particular, closing all their Amazon Fresh grocery stores. Now, that's not a lot of them, but folks that have been following this would know Amazon has been, one could say, experimenting. Others might say screwing around with physical retail in different formats for a number of years. They definitely have not hit the strategy here. They've closed their Amazon Fashion, their 4-star, their bookstore. And so another failed experiment is Amazon Fresh. But I think what's clear is they haven't found the formula for physical retail outside of Whole Foods Market, which they are going to continue to expand, but that's a relatively niche offering. And they appear to be leaning on their online grocery for now. Now, we talked about this a few times, so I'm not going to go back to that. If folks want to hear a little bit more about that, they can listen to our interview with Jason Beekle, who runs the worldwide grocery business. It's interesting to see what's going to happen here. The other thing we talked about, I guess, a couple weeks now, is that Amazon is going to open this superstore, which will include grocery. That's not going to be open for a while, and it's one store. So to the extent that's going to be a format they run with, we have a long time before we'll know whether that's true. But the little tidbit that I learned there from a Wall Street Journal article is this store, which when we talked about it, we said it was way bigger than even the biggest Walmart superstore. About half of that store is going to be e-commerce fulfillment. So I think the selling square footage looks to be a lot closer to a super Target or a super Walmart. But anyway, more to learn about that if, in fact, it gets approved and built. A couple other things I just mentioned super quickly is Amazon announced 16,000 layoffs across multiple divisions, and apparently quite a few more are going to follow. The number that's been reported is a total of 30,000. They previewed this a bit last year when they were talking about AI, and we might get a little bit more about, well, presumably we'll get a little bit more about what's going on at Amazon because their quarterly earnings will be out this week. So we'll talk about it on next week's episode.
You mentioned layoffs coming out of Amazon. They're not the only ones who announced layoffs. It seems to be a bit of a trend so far this January. Talk about it.
Well, yeah, in the scheme of things, when we hear some of these big layoffs, because over the years we've been doing the podcast, we've definitely had numerous companies, retail and outside of retail, do big layoffs, and it doesn't necessarily change the whole employment picture. But UPS, which is really retail adjacent, but obviously they serve a lot of retailers with e-commerce fulfillment and shipping and the like, they are going to lay off 30,000 people. So that's a huge, huge number. And then more specific to retail, again, not massive in the scheme of things, but Home Depot laying off 800 people in their headquarters. They're also expecting people to be in the office 5 days a week. I guess that is also probably going to push some additional people out that don't want to do that. Nike, slightly smaller, 775 jobs in the home office. They said that is tied to being able to leverage automation. So is this a meaningful shift in the retail employment picture? A little bit hard to say. whether this is really a trend or just a bit episodic. It's right after Christmas, so a lot of times that's when these kind of layoffs get announced. Will we see more of this as part of my prediction that we will see more issues of slowing or non-existent job growth and reductions in force due to the shift to AI or robotics? But it also may just be a post-pandemic correction because, as we talked about, a lot of companies went kind of wild and crazy adding staff, particularly in the technology space. And the combination of business slowing down and automation is, I think, causing some rationalization there. So this may not be a macro trend, but I think it's something to keep our eyes on.
Is there any room in your thinking about these layoffs to think they're a post-tariff move? In other words, listen, our margins are going to go down. We can't raise prices according to the costs, so we're going to have to cut some costs somewhere. I think of Home Depot, for example.
Yeah, I think that's a contributor. Again, it's a little bit hard to say this is a broad trend, but it certainly wouldn't surprise me if that's what's driving this, because we are seeing plenty of retailers that are having a hard time. They may be driving the top line, but not necessarily driving the bottom line very much, if at all.
All right, so let's tap into what's going on with Saks Global bankruptcy. A big announcement and not entirely unexpected.
Yeah, well, there's going to be a lot of news coming out of this Saks Global bankruptcy, and I'm sure we have a bunch of listeners that are keenly interested in it because of the drama. Some of them are interested in it because they are involved in the luxury space, and others are probably like, enough about Saks Global already. So we'll try not to talk about this every week, but it was a pretty significant announcement just last week. Not, as you said, not unexpected, but kind of the first shoe to drop in terms of the major steps towards the reorganization, which is they're going to close most of their off-price stores. So that's largely Saks Off Fifth stores, but there's still a few Neiman Last Call stores, which are off-price. So a bit more than I thought the total would be. They're also shutting down offfifth.com, the e-commerce part of that. So that won't be around. And the remaining stores, which I think is about a dozen, will be focused on selling residual merchandise from full line. As many people may know, most of the off-price sellers, the product is made directly for the channel. It's not actually clearance merchandise from full-line stores. But I think they basically said, we're going to get out of that whole business, but we do need some stores to help liquidate merchandise effectively. And so that is the strategy they're going to adopt. Overall, this is not terribly meaningful to the total revenue. Obviously, they weren't making a lot of money from this. They wouldn't be closing down all these stores. One of the things I think is just interesting with the 50 or 60 stores that are closing, this is going to be a real gift, another gift to both Nordstroms and Bloomingdale's, because Nordstrom has this huge rack business. Many of the off-Fifth stores are in the same, here in Dallas, for example, two of them are basically like literally across the street from each other or in the same shopping center. Same thing for Bloomingdale's outlet. Many of those stores are in the same place that a Saks Off-Fifth would be. So you would expect a bunch of that business to literally transfer across the street or down the way. Again, not huge to the total.
We're starting to get some earnings breadcrumbs, starting with some less than positive news from LVMH.
Yeah, this is tied to I've got a prediction if people haven't listened to last week's episode where I talked about the predictions or looked at my Substack where I cover this. I think that the luxury recovery that a lot of people are expecting is going to be a mixed bag. And we got a little bit of an indication, though, very early from LVMH because they had a pretty weak quarter in particular. Outside of kind of core retail, their premium spirits business was down quite a lot, but more in the center of retail, their fashion business was down 3%. So that's not great, and they didn't necessarily sound super encouraging. So time will tell there. On the more positive side, Starbucks, which we've talked about a bunch, is starting to show a bit of traction. They have really easy comparisons, so we should keep that in mind, but they did have a small comp store increase. They said that about 3% increase in traffic. That's the first increase in traffic they've had in a while. They are introducing a lot of new menu items, and they are reintroducing in their loyalty program some of these tiers to try to encourage people, I guess, to stretch with more spending, more frequency. So little ray of hope, but they definitely have a long way to go before we could really say they're back.
You and I have both run loyalty programs in retail. I was surprised when they removed it. I am a big fan of tiers.
Yes.
It's something to aspire to, not just earn more points. And, do you applaud their moving back to this tiered approach?
Well, when I led the redesign of the In-Circle rewards program at Neiman's, one of the central pieces of that was to get the tier structure right and to really include that stretch. And if you look across many retail programs, that's pretty common. So yes, I was surprised that they removed it because it does seem like a very obvious component of great loyalty programs. So I don't understand why they did it in the first place, but it does. And I haven't looked at it carefully enough to have a specific opinion about exactly how they did it, but it does seem like a very reasonable thing to reintroduce. So again, we'll see whether that really moves the dial for them.
All right, well, that's a wrap on the news of the week. Let's now get to our fantastic interview, very vibrant, with Billy May and David J Katz, and we'll be back to talk about what we found remarkable this week and what we're keeping our eyes on around the corner.
Well, I am really looking forward to this conversation because we have two of the OGs of retail, Billy May.
Wait, is that a good thing or bad?
That means
about
old.
it's a euphemism.
Yeah, with the emphasis on the O, as I say. Actually, folks that have been on the pod before, together again for the first time, I guess we could say. David Katz and Billy May, welcome, gentlemen.
Thank you for having us.
A pleasure to be here, as always.
Well, we have a lot to talk about, but one thing we should talk about, because we are all about shameless self-promotion, is that all four of us are NRF top voices. Now, I was informed by our insurance company that the four of us are not allowed to be together. So hopefully
we can't fly together.
We can get out of here before they discover that. But I'll tell you what. Why don't we come back to that? And we'll just start first of all by letting people know who you are and what you do. So, Bill, you want to talk a little bit about your professional and personal journey in 24 seconds, if possible.
24 seconds. So I'm the CEO of Brooklinen. We're a leading home essential direct-to-consumer brand. But my background, I'm a fourth-generation retailer. So I was born and raised in the business, started my career as a merchant, got bitten by the digital bug 25 years ago, worked for some iconic global brands.
You've been in a few places listeners may have heard of.
I have.
You want to drop a few names?
Abercrombie & Fitch, J. Crew, URBN, Adidas. So some great brands driving a lot of digital transformation.
Did you leave Adidas because you didn't pronounce the brand correctly? Or
in the States, certainly correctly. Internationally, no.
Yeah. All right.
That was subtle.
Yeah. Excellent. And David, how about you? David J. Katz.
J. Katz, yes, thank you, Steve. My journey is obviously a very clear linear path, not as many stops as Billy. I started as a neuroscientist, and that was my undergraduate and some of my graduate background.
So you're not a rocket scientist.
I am not a rocket scientist.
But you maybe could have been a brain surgeon?
I was headed sort of in that direction. When I was 7 years old, my family tells me I stood up on a dining room chair and announced I wanted to be a doctor, and they went, well, last week you wanted to be a firefighter. I went, no, not just any doctor. I'm going to be a brain doctor because all of you are really weird, and when I grow up, I'm going to fix you. So, but that does lead to today understanding why consumers behave the way they behave and how to influence that. So it's somewhat of a clear path. And got into family businesses, kind of like Billy, and then went to business school, specialized kind of in direct marketing back when it was print and catalog, which really kind of leads today's e-commerce and social selling and I guess generative selling now and some other processes. And I am an executive vice president and CMO at Randa Apparel and Accessories, and most of your listeners do not know what that is, but virtually all of them wear some of our products and own them. So we make a lot of accessories and clothing, men's, women's, kids, and interesting journey. Pretty big business.
And you've been there a while.
I have been there a while before I looked like this. Yes.
Let's tap into some of this ambitious wisdom about understanding people's brains. It's a nice segue. You know, we all want to be customer focused. We all want to understand where the customer is. We could talk about there's many customers. How do you think about that? And how do you approach that? Where do you begin that journey? This question I'm going to ask both of you because you both have such different interesting perspectives but on the same industry. But what's your starting point and how are you thinking about it? Like, what's the tradecraft?
I think that digital analysis and data is a great way to understand behavior, but it's not the best way. The best way has been somewhat abandoned and lost, in my view. It is when great merchants, marketing people, designers go out onto the selling floors of stores and watch customers and engage with them. I would think, Billy, that's family lore. There are some great training programs out there, but nothing beats being out with your customers while they're shopping and talking to them.
It's funny. I remember we were talking back in the time tunnel, Hudson's Bay, that we should hire anthropologists because it would help study the behavior in the wild, so to speak.
I had the pleasure and privilege of working with a cultural anthropologist who specializes in retail shopping named Paco Underhill.
I remember, yeah.
He's been amazing, and that's exactly what he does.
Yeah, the butt rub, the butt rub.
The butt rub, the
butt brush or whatever.
How close those aisles are, putting geriatric medicines on lower shelves with small type and hard to open packaging. You know, evidently that's not the best practice for selling that product. And
Billy, what signals are you watching? What do you pay attention? There's so much signal and noise. What do you pay attention to?
Yeah, I think there's like what's changed and what hasn't changed. I mean, what hasn't changed, consumers still want value. They still want ease. Trust more than anything is critical these days. And really brand and emotional drivers are critical. But when you think about like what has changed, they have less patience. They make decisions much faster.
Is that an attention span thing, you think? Like the patience, is that anxiety or just attention span?
I think it's attention span.
I think it's technology driven.
100%.
They have the ability to make these fast because they've got more information faster and faster delivery.
Well, they're also trained that way by the platforms, right? Consume more.
And this is why I think the element of trust is so important, because consumers today just have a lower tolerance. They're more impatient. Their expectations are higher. And if you can't deliver on your promise, if you can't deliver on that trust, they'll move on to something else very, very quickly. And so the margin for error is much narrower. Brands have to be more responsive more than ever, which gets back to consumer behavior. And it's more and more difficult to keep up with the pace of change.
Sure.
Consumers are adopting at a much faster rate than retailers or brands are able to respond.
Let's talk a little bit about, because you kind of tease this out, and I know value is a big phrase. I think you don't sell anything unless you deliver value, so it's the definition of value. But in this particular case, I really want to talk more about price. And a lot of people talk about this as the flight to value. Michael likes to call it the stampede to value. But as I'm sure you're aware, even though there are clear pockets of success on the high end, the vast amount of growth going on in the industry is being captured by Amazon, Walmart, Costco, TJ Maxx, dollar stores, et cetera, et cetera, et cetera. Since you both have worked across price spectrums and seen lots of things, what do you make of this? Is this a moment in time because of economic anxiety? Is this some sort of fundamental shift? So discuss amongst yourselves.
I don't know that this is unique. I think value has always been a driver for consumer behavior. It's a matter of what does the customer value. Price is only one part of the value equation. What I see more of is people have different values at different contexts, at different times of their shopping and purchasing experience. We now find the same customer, exact same customer who's buying from some of our products at Macy's, is also buying from Marshall's and Costco and occasionally Walmart Marketplace. And if they, depending upon where they live, they might stop by Tractor Supply with their 2,400 successful stores. So I think what they value in some cases is convenience, speed, service and information, and price. They are more discerning. They make better educated choices.
And there's a lot more information available to make that
information,
decision,
but I think value has always been a key driver. It's just the way that they value it. And traditionally, we've bucketed them as this customer values this. Well, in what context?
Yeah, exactly.
And I 100% agree with what David said. You know, value it's not a new definition of value. It's and consumers didn't universally trade down. They traded what I would say is towards confidence. And value means different things in different contexts. So in tight moments, price is really important. Quality when replacement risk is high. And then when you think about reliability, when things are chaotic, especially during the rush of the Christmas and holiday season. And so I think value is not just a single positioning anymore, because it really is contextual. And, if I think about Brooklinen and
I was going to ask specifically about, if you sell products that presumably are meant to last, it's not a consumable, right?
That's correct.
Then people may very well say it's worth paying a bit more because I'm going to enjoy it for a long amount of time. It's going to last a long time. Sorry, I didn't mean to interrupt you.
No. That's 100% spot on. I think that's where value is contextual. That's where quality is important.
Yeah.
Because it's, are you providing something that is of such high quality that I value that, and therefore I'm willing to pay for that. And that's where the reliability and that's where consumer trust comes in, because they trust that you're providing a quality product, and therefore I don't need to trade down, quote, for a cheaper product. And so what we say is value isn't cheaper, value's clearer. And I think that's what the consumer is demanding, is clarity around the value.
Yeah. I think clarity is a great point that Billy just made. We have 35 licensed brands and half a dozen owned brands. The licenses are deliberately chosen for different value propositions at different contexts. So we're going to sell a Levi's product at a brand premium to a certain customer at certain times, or Calvin Klein, or it might be Williamson-Dickie at a Walmart, right? Or somebody else at a Nordstrom, or is Saks still in business today?
What time is it?
Yeah.
So, different brands, different retail channels, and different times. Sorry, didn't mean that. We love all of our retail partners equally.
It's interesting. I want to dive a little more into pricing strategy, because I often think of it, there's a very, very big segment of the consumers that I call the cash flow consumer. They run their lives like they just have what they have. They don't care about if this is going to last how many years. I just need it today. Even in consumables, right? I'd rather buy it at the dollar store, smaller format, because that's all I can afford, even though per ounce it's like 5x what I'd buy at Costco. But let's really get into pricing.
Michael, I want to say one thing on that. That's, if I can. One of the things we found recently when we're studying customer behavior in the stores, talking to them out there in the real world,
novel concept,
is that one of the key drivers for value and brand is I've never heard anything bad about that brand.
Yeah.
It's not always, I love that brand, I'm going and driven. It's, there's the, I need confidence I'm not making a bad choice.
Right.
Interesting.
And it's like, I'm not sure which one to do, but I certainly don't want to do something wrong.
Right.
And that can apply even to fashion.
Absolutely.
So, I'll give you an example, okay? Billy and I do a lot of talking, as you guys do on stage, and what are the best denim pants to wear at a given moment? Different times, different places. It's never wrong to wear a pair of Levi's. And not that I'm pushing Levi's, but you're safe. It's not a bad choice.
Right.
We used to say, I worked at Levi's, we used to say timeless and timely.
Yeah.
Both fashionable and ready to go. Promotional support for the show comes from Find Mine. In the time it takes to listen to this ad, your team could have leveled up their productivity by 90% and set up your brand for increased sales. Find Mine's AI tools let you run operations on thousands of products right now. Get self-service AI to support product tagging for better success with AI agents, dynamic programmatic ads for Meta, visually similar product recs, complete the look styling, trend and campaign curations. Find Mine's innovative enterprise platform currently generates breakthrough customer experiences for top brands like Lululemon and Ann Taylor. See what Find Mine can do for you and join the waitlist at findmine.com. Promotional support for the show comes from Glass Media. How do you amplify the wow in your stores? With next-level in-store signage and displays from Glass Media. Glass Media boldly challenges the status quo by leveraging its world-class design, engineering, and manufacturing to elevate brand presence and drive both engagement and conversion. Find out why leading brands and retailers worldwide trust Glass Media to make their stores more remarkable. To take your visual merchandising to the next level, go to glass-media.com. Speaking of timely, let's talk about pricing strategy. These are dynamic times. You've got, we may or may not have another tariff coming on today, according to the news. But you've got all that. You've got the ideas of dynamic pricing. You've got shifting supply chains. How do you approach strategically pricing? Because I think from the outside into the industry, it's like pricing just happens. We look at what everybody else sells at it, or we build it up. But it's a very strategic element of what you do. Yeah,
it is, and I think pricing was what happened behind the scenes, and then tariffs happened, and so now pricing is certainly front and center for every executive, and it's a topic at board meetings and conversations. And you talk about margin, certainly, but pricing strategy and having clarity around price architecture is at foremost of most strategies and strategic planning today. And so whether it's tariffs, whether it's logistics, whether it's geopolitics, all of it has to come into consideration. Coming back to trust and confidence, as David said, you have to give the consumer a reason to buy your product. And consistently promoting it or raising prices kind of silently behind the scenes erodes trust and erodes confidence. And so our belief is you got to give the consumer a reason to want to buy your product if, let's say, pricing is going up or raw materials are going up or sourcing prices and inputs are going up. How can we redevelop the product in such a way that you're giving the consumer a reason to want to buy your product again, not just because it's on sale and you took the price up and you took it down? And so there's this element of, pricing has moved from the finance world to the leadership space. It is a topic of conversation. We talk about it, almost weekly within my leadership team and certainly with, our stakeholders. And we want to think about how we build our line, good, better, best, from a price architecture, and that it's clear to the end consumer. And this is where, they've got more information than certainly we had today. And it's being exposed much clearer to the end consumer. They've got a lot more choice. So having flexibility around supply chain, having flexibility around your go-to-market strategy, but you have to treat pricing like a trust decision with the consumer in mind as opposed to a pure financial decision.
David, could you step outside your role for a second and talk about dynamic pricing strategies, even in the QSR, just from a consumer perspective? Like, how do you, we got AI, we got machine vision, you can put a ton of data in a QSR place and you can have, stories of they can go up, down, or sideways in pricing. How do you fundamentally think, Billy's talking about trust, do consumers, I think it's eroding a little bit when the pricing moves a lot, but maybe I'm wrong. Maybe consumers are happy to have, I don't really even remember how much that thing was.
Pricing is very strategic for both the customer and for the brand, the vendor, the product. It also has different consequences over time. There's a short-term consequence where you lower your price, you sell a lot of volume, you do that. There's the long-term consequence of the erosion of brand value, as Billy was referring to. And not everyone can play this is an important thing. It's not an option available to all companies and brands.
Sure.
And the reason for that is if you're a luxury brand, you really can't afford to promote too much, right? I mean, that's going to crush your brand. But beyond that, whether you're publicly traded, private equity funded, or totally private funding, you may not be able to afford to play that game. And I hear companies use pricing as a strategy, and I go, you can't afford to not raise prices. Because if you take that margin hit, you can't report that to your shareholders and your stakeholders, and you don't have the balance sheet. I mean, one of the nice things about going to our company is we have a very strong balance sheet. So we get to determine on a given product, surgically or brand, if I hold price, I can gain market share.
Right.
I may lose contribution margin in the short term, but gain in the long term. I can afford to play that.
Right.
Other brands, other products, maybe I want today's market share, or I just want the margin dollars.
Yes.
And so it's a tricky thing to play.
Earlier in my career, we used to say you can't eat rate. You can, you eat dollars. And so certainly if you're going to take the margin hit, you got to get paid for it.
Yeah.
Because your rate's going to go down. You need the dollars to come up. But the one thing that, I'm not a lawyer, I don't play one on TV, but you talk about dynamic pricing, Michael, and you talk about, algorithmic pricing. There's a lot of legislation at the state level, which for a retailer creates massive exposure. And there's a lot of nuance in that, if I send you an email, which is a reward for you that you can use, and I don't offer it to Steve, algorithmically, I've rewarded you, but not Steve. Therefore, that's algorithmic pricing. So even some of the early direct marketing tactics that you might use, whether it's through trust or transparency and consumer confidence, there's legislation that's brewing that's going to make that even harder. And so that's why I keep coming back to that clarity and consumer trust.
Two things I'd add to what Billy just said. First, Cy Sims used to say, an educated customer is my consumer is my best customer. Today, they're very educated because it's really easy to see that. So the customer effect on how they see your dynamic pricing. But on the legislative aspect, and I also don't play a lawyer on podcasts or TV, is if you've got your product in a variety of distribution centers, and you can deliver from one center to one customer at a lower cost than you can to another, can you price it differently? There are retailers that are playing that algorithm.
Absolutely.
Yeah.
And maybe that's beneficial to the consumer because, hey, you live nearby, I can deliver this at a lower cost, you get a lower price.
Right, right.
On the other hand, how does state and national regulation look at the fact that different consumers on the same day are getting different prices for the same product?
Yeah, yeah.
So
Well,
technology, again, driving some of this optionality.
Sure. Well, speaking of legal issues, we are required by law to ask a question about AI, and so we have gotten to that portion of the program. And as we, I've got lots of people who started to say you can't spell retail without AI. I also point out you can't spell failure either.
Ow.
But I guess
there are other words we could choose, but those are two of them. Yes.
There are. We could do a whole sailing thing. But anyway, what I want to get at is let's talk a little reality from your worlds in terms of what's working, what's not working, and some of the challenges of deploying any forms of AI, Gen AI, SEO, GEO, MOUSE, whatever. Billy, you want to start us off?
Yeah, I mean, it's a journey.
You can spell journey without AI.
You can. That's a good word. Let's add that one. It's hard to separate the wheat from the chaff. We are at the Big Show. There's 43,000 people here. There's over 4,000 vendors. It's hard to separate the wheat from the chaff between what's real and what's not. But I think most importantly, as a consumer of these solutions and within our organization, AI doesn't fix broken models or broken solutions. It exposes them. We have viewed it kind of in three different tracks. One is around the experience, one is around the analysis, and one is around, I'll call it brand. And they're each at different levels of maturity. So from an experience standpoint, fairly far ahead and has been utilized within CX and in other areas around personalization for years. When you look at analysis, there's increasing use of it. It's informing decisions. As a brand, we have to say, do we want to let the AI model make the decision? So at what level do we want to provide autonomy? And then from a brand standpoint, how much, whether it's creativity or a creative process, do we want to utilize? So if I were to say from a maturity standpoint, fairly mature, emerging mature, and then early stages. And we have a task force, it's cross-functional, people participate. We built it bottoms up as opposed to top down, although I'm the sponsor, because we wanted to ensure that as an organization, and we have a fairly young employee base, so they're using solutions. We want to keep up with the consumer. And it's I'm not at the point where I'm saying, how did you use AI to prepare for this, presentation? But that's probably coming, or this analysis, or any of these others.
I agree with everything that Billy just said. And I guess just to add to the question that you asked, I look at AI as, is it accountable? No, someone has to be accountable, and we don't allow it to make judgments. We allow it to give us information.
Sure.
It's certainly incredibly productive and efficient at creative asset creation, copy, images, optimizing certain platforms and performance. We have two tranches. One is what we call everyday AI. We just rolled out an AI to 1,200 associates to use bottoms up the way that's effective for them. We're giving them the tool, we're giving them some coaching, but you use it in what you need, whether it's every day, every week for drafting an email, summarizing a report, analyzing, creating, that's up to you.
Right.
And then we have game-changing AI, which is how do we create a competitive advantage based on our data and using AI to help our customers, both retailers and consumers. And that's more top-down, right? And that's many millions of dollars of investment and time and energy, and we're still developing that kind of a tool. probably that's going to involve sophisticated supply chain and inventory management.
Sure.
The idea of being able to have the right inventory at the right time, at the right place for the right customer, and flowing that through the system. So that's where there's going to be a big AI play.
I think that 100% what David said, spot on. And I think he even used the word tool, which I think is really the important piece, that AI is it's a power tool. But fundamentals are the blueprint. So how does it enhance, improve, coming back to my comment around speed, how does it expedite decision-making, all of those other elements are enablers driven by AI. What we didn't say was, transacting through, a agentic or, any of the chat platforms. That's early stage.
Early stage.
That's very early stage. And so certainly something to keep on your radar screen, have conversations. What does it mean architecturally? But in terms of moving the needle today, that's where I think how you embed it into your organization creates optionality for the future.
And Steve, I take a contrarian position on GAI and GEO and some of this in terms of shopping. Not that it isn't going to be effective. It's too early. As Billy said, it's early days. We don't know. Let's see what it's going to be. It's not the metaverse, but it's something beyond that. Okay, but
what's that?
I don't know. Yeah, exactly. I don't know exactly where it's going. But I don't think it's revolutionarily new. I think we've always wanted to drive relevant customers to our products. And whether that was outdoor advertising in print and newspapers or radio or television or internet or social media, this is just another technique of, at the right time and context, getting a customer to engage with your product. And whether it's making some of that process easier and reducing friction or not, it's still a battle for eyeballs and getting customers there.
Sure.
So I don't think it's a totally different concept. I think it's an efficiency method of getting there. Your local Macy's was a dry goods store down on 18th Street, and the proprietors knew the customer and showed them what they needed at the right time.
Yeah, same.
That's what
same
this is
concept.
doing.
Right. Yeah.
I want to talk a little bit about disruption, kind of last question before we get to a lightning round, pass the mic back to Steve. So if we think about the COVID era of retail, I think about organizations, and what I heard a lot of is we really have to pivot to agility. We learned resilience for the team, and I heard from a lot of executives, I wish I could capture that speed of decision making the way I did. So that kind of informed, I think, organizations since the COVID era. Now we're in a different era. Let's call this another tranche of era with the AI and the advancing technology. Hey, Billy, start with you. How do you prepare and how do you think about leadership in this next major disruption and what we do for a living?
Yeah, I think that I'd like to say that, during COVID, growth masked a lot of, I'll call it, operational challenges. That when you get into a normalized environment, as we've been the last 12, 24 months, that focusing back on fundamentals and execution is separating winners from losers. And so that means, fewer bets, greater clarity, increased accountability within organizations. And so you move from this consensus leadership to the clarity of leadership, and from these vision decks of what you want to create to really operational cadence. And there was a Harvard Business Review article with the former CEO of Intuit, and he talked about leaders who operate at a detailed level, not just operating at a
10,000 foot level or whatever.
Exactly.
Yeah.
And he talked a lot about what separates the winners from the losers is how the leaders create process. Not that they're telling people what to do, but how they create the process for work.
Oh, that's interesting.
And so I think, when you step back and you look at winners and losers and who's taking share versus holding or losing share, strong operators who used COVID to make investments, certainly, but to build resilient processes and scalable processes, that simplified go-to-market is unlocking speed, and as a result, they're being more responsive. And so it sounds trite, but I would say execution today is very much the new strategy. How do you test? How do you learn? How quickly? So having that is critically important. But how you execute day to day and how you make decisions quickly, if something's not working, how quickly you can move out of that onto what's next, as opposed to, I've got an 18-month problem I got to work through. That's a death knell in today's market. And so I think the degrees of freedom are much narrower, and the companies who have clarity around that are the ones that are winning and taking share.
David, is there a freedom in that? Steve often says, not taking risks is the riskiest strategy of all, and what Billy's describing is this collapsing of the frame, of the lens. So, my lens isn't, well, let's try this for 3 years and see if it works out. Do you think in similar terms?
I don't know that it's a narrowing of that capability. I think it's providing operational guide rails. Here are standards and here are guide rails that we expect our teams to use. Delegating and allowing and enabling that responsibility, empowering your people to make those decisions within those guide rails. So you've got this, you're not going outside of this. And I think one of the things we lack a lot is everybody's got a to-do list, but Warren Buffett very famously said, what you really need is a not-to-do list.
Very good.
Okay? And I think that when you're going to empower people, you have to go, here are your guide rails, and here's a not-to-do list. Within this structure, go ahead and make decisions. And then you need an organization, because if you're really empowering that way, they're going to make mistakes. There has to be, you're not going to punish people for making a mistake. There can't be a negative consequence for following those. Now, you do it if you make mistakes over and over again without enough wins, that's a whole other story. But you have to be allowed, being given the permission within that structure that Billy's talked about, to make an error and then keep going and next time be successful.
And I think that it's the discipline over activity element. It's it's still having the confidence in making bets, but most importantly, the famous adage, you can't predict the future, right?
You can't.
You cannot. You can try.
Predictions are difficult, especially about the future.
Yeah. You would definitely know. But the key is, how do you respond faster to it?
Right.
And I think that's the element that organizations that have built a more responsive, as opposed to a very rigid structure, those are the ones that...
One of the things we did to enable what Billy just said is we lowered the number of people who are allowed to say no.
Interesting.
Because if you're too bureaucratic and too many people have that option through, there's only a couple of people that can actually say no.
Yeah. I often say step one is eliminating the Department of No if you want to make any progress. Okay, we're coming up on our time. I want two lightning round questions. So if you could be relatively concise, but a little bit of an explanation for your choice. So one is, this is the Remarkable Retail Podcast. We try to keep track of retailers that we think are truly remarkable. Is there any retailer on your radar screen that perhaps you think people might be talking about in a year or two, but maybe don't know so well? David, anybody?
Maybe talking about. Well, we love all of our retail partners, right? So throughout the entire spectrum globally. One of my favorite retailers, which is not new, some people talk about it, but most don't, but should talk about them more often, is Tractor Supply and their CEO, Hal Lawton.
Yeah.
2,400 stores, opening 100 stores a year. And Billy, I just was in Nashville and listening to some of their discussion. 2,400 stores with profitable four-wall contribution.
Novel concept.
Okay, a novel. Wow, right? Interesting idea. So I think that they're going to be on the radar more a year from now.
Okay, fair enough. Billy?
I'm always fascinated. There's a company called Oddity. They're a portfolio company, and they use data to kind of build and launch new businesses. They're publicly traded. And they've built a sensing kind of development model. I'm always fascinated by what they have built and how quickly they can build and develop and deploy concepts to market. They've got a couple brands in the market today. I think it's one that doesn't get discussed very often. It's a very interesting, kind of holding company business model that drives innovation. there's a lot to learn there.
Okay. Well, sometimes we use this question to source future guests, but Hal's already been on, but Aditi has not.
I did not know that Hal had been on.
He had, actually. Okay, last one. Quite a few turnarounds of iconic brands going on. Who would you handicap as likely to show some real traction on the turnaround, and maybe one where you're going, I'm a little bit more skeptical? Billy, how about we start with you on this one?
I mean, the one that people talk about most frequently is probably Gap and what Richard Dixon has done within that organization. There's tremendous momentum internally. My daughter just the other night had mentioned Gap, and she's never mentioned previously. She's 21 years old.
So long on Gap, maybe short on... These are not, we're not giving investment advice, just to be clear.
Yeah, I think businesses that have struggled, that maybe have been bought by private equity in a couple different ways of trying to resuscitate, whether it's the Express, Bonobos, that group. I'm a little, jury's out, certainly. It's hard to resuscitate businesses that are especially troubled. Chapter 11 is certainly not Chapter 7 liquidation. But going back to my consumer trust and speed, the consumer moves on very, very quickly.
Yeah, and probably the balance sheet
no doubt
that you talked about. All right, David, who long, who
I don't know that
on?
I'd call this a turnaround, but let's see what happens with Target over the next year. I think that you've got new leadership coming in. They have 1,800 stores out there. I don't want to look at them as a negative spiral that they're in. I think that can be turned around, and I am cautiously optimistic that they shall do so. So that's my turnaround.
Can I add one more? They're not public.
That's fine.
But I think Nordstrom, as a private company, is taking more risk than certainly they did as a public company.
Full line or rack?
Full line.
Okay.
And they're trying things.
Yeah.
And they're taking a little more risk, and they're trying to be more forward-thinking. And when you think of what's happening in the luxury or near luxury space, I would, kind of watch this area. I think that's they're going to end up in a much better place.
All right. Fair enough. Right. You don't have anybody you want to...
Yeah, I'm not going to pick a specific retailer, but I'll give you a channel, okay? And I think this is not new. This predates even COVID. We're going back to what's the future of the department store? Yeah. A multi-branded, mid-tier, multi-product store. Yeah. It's not going to go away. Customers, let's take the apparel space. There has to be a place for a customer to feel, experience, try on, and get views of what apparel is. You can't do that at Walmart, and you can't do it at the off-price channel, and you can't do it on Amazon, and you're not going to do it at Costco, some of the winners that you talked about. Yeah, sure. There's a need for this. It's not just vertical. I want to try different brands on, not just, vertical retail is a whole other story, but this is where the department store was created and where it lives. Someone has to reinvent that successfully. And I will tell you, I think Tony Spring's doing a good job.
I would agree.
At Macy's now, but he's shrinking the business. We're going down from 800 to 500 to 400 and 300 some odd stores. So
eventually you could have like three really amazing stores.
That would be called Bloomingdale, which is what Tony came from. Right? So,
Coincidence?
But somewhere in that space, there has to be leadership that grows. And Michael knows, where do you do that in Canada now? Where do you, with the Bay gone, that channel is challenged dramatically, but there is a consumer need for success. And that's one that we should all keep an eye on.
Well, gentlemen, one of the reasons I continue to and love doing this is I get to talk to people like you. So, I'm blessed to be here with you together and just having this great conversation. So thank you both for joining us here in the Narvar podcasting studio on the NRF show floor. A real treat. Every time we talk, I learn something. So thanks on behalf of Steve and I, thanks again so much for joining us.
Thank you for inviting us. And by the way, a congratulations to Billy, who is now a board member of the NRF, a brand new board member. And fourth generation in retail. So congratulations.
And thank you very much for that. And I'd be remiss if I didn't mention that I'm not only a fourth generation retailer, I'm a second generation member of the NRF board. My father served almost 30 years ago.
Wow.
Wow, all those people around us just cheered.
I know.
Incredible. I travel with my own cheering squad. But yes, very humbling. And equally, not just as the only direct-to-consumer brand, kind of on the board, but as a digital executive who's kind of grown up to be among Hal Lawton at Tractor Supply and many of the other large retailers. It's a different perspective. So
Sure.
I'm glad to serve.
All right. Well, thanks, gentlemen. Once again, look forward to seeing you at the next gig.
Thank you very much. Thank you, guys.
All right, we are back. Let's start with what you are finding as a remarkable story of the week.
Well, I think, this is also kind of retail adjacent, but it's just the continued, seemingly crazy investment in AI. So two pieces to this. One is Anthropic, which folks may know is behind the Claude AI model. They are seeking a valuation that is rumored to be $350 billion. Sounds like a lot of money. But just for a little bit of context, that's about the same valuation as LVMH, which is quite a large company with, as folks may know, I think 70 different brands underneath its portfolio. Started 40 years ago. Anthropic is 4 years old. So that is quite a high-valued toddler. And then in semi-related news, Amazon is rumored to be contemplating a $50 billion investment in OpenAI. OpenAI is rumored to be looking to go public later in the year. So Amazon, I think, has got about $70 billion in cash on the balance sheet. So they can certainly afford it, but it is pretty mind-boggling to get your head around some of these numbers. What can possibly go wrong? There's no sign that the frothiness of the AI market is subsiding anytime soon.
Well, from my perspective, I was looking at some report put out by the Fed that tracked the concentration of wealth in America. And, we often talk about the top 10% or the top 1%. What drew my attention was the top 0.1% has 10% of the wealth in America. Yeah. So it just reminded me of the point that you often make about this notion of resilient consumer. And there's an article in the Wall Street Journal, I think, that talked about, rich Americans did well, everybody else not so much. So I think it also connects to what, for me, is around the corner. I mean, this kind of wealth dispersion just leads to social unrest, I think. It leads to a bunch of things, including a more complex trying to understand our business. Sure. But I do think it's just bad for society that you have concentration of wealth so extreme. I think you look at many countries and you see this kind of thing. So anyway, I found that remarkable, that 0.1% with 10% of the wealth. So anyway, that's what I had on mind. Now, for you, you're thinking about TikTok for when you're thinking about what's around the corner.
Yeah, so we talked obviously about the TikTok deal for the U.S. being consummated and some of the unusual things that are going on there. I thought there were two additional unusual things that I noted this past week. One is that a bunch of users on social media that are flagging what appear to be some algorithm changes, as well as things getting flagged. So certain posts disappearing or being downgraded. Now, there was a little bit of an explanation from TikTok that they had some sort of outage, but I would say the patterns were maybe a little bit suspicious. But I think the main thing is that the algorithms seem to be promoting more right-wing content and downgrading anything that's critical of the administration. So I don't think that's, regardless of your political beliefs, I don't think that's necessarily the greatest. It's sort of reminiscent of what's happened at X, which I always love that Kara Swisher calls the Nazi porn bar because of the the tilting of the content. Yeah. The other thing that is much more retail-centric is TikTok Shop, so the commerce part of TikTok, appears to be largely discontinuing independent shipping for some of its sellers and requiring that shippers or the retail partners use their proprietary logistics. I'm not sure I really understand the merits of that. I mean, it seems conceivably good for TikTok, but it will raise the cost and flexibility for a lot of sellers, which presumably will cause them to not focus on TikTok shops or or even leave. So somehow or other, it does seem like it's destined to raise prices and perhaps limit choice. So I am not sure why that is a good thing. Again, something, it's on the radar screen because I think more will be revealed in the coming weeks and months to see if that in fact sticks. And if it does, what the implications are, because TikTok Shops has been growing incredibly quickly. And obviously TikTok in general is a big influence on how retail performs. So if the algorithms are changing and the usability of the shopping platform is more narrow, that would seem to really affect the trajectory of TikTok as an important component of the retail business.
That's it. Thanks, everybody, for sticking with us for the duration, but we think it was worth it, and certainly we enjoyed the conversation, and I think everyone did as well. So that's a wrap.
Thanks for tuning in. To help more retail leaders discover the industry's leading podcast, please drop us that 5-star rating and review on Apple, Spotify, YouTube, or wherever you enjoy your pods. And for more on my strategic advisory services, keynote speaking, best-selling books, and even more retail industry insights, go to stephenpdennis.com.
If you are a brand or service provider looking to take your influence to the next level, reach out to us for sponsorship, advertising, or event partnerships. And if you want to learn more about my own keynote speaking and advisory practice, reach out to me via LinkedIn.